welcome to the Future of Banking live panel on small business banking in the US and Latin American markets. I'm your host for the panel, Cam Chana, and I drive digital strategy and innovation for the SME and the SME space at Temenos. So I'd like to welcome all our panelists and of course our viewers. As viewers, if you do have any questions throughout the panel, you can of course reach out to the organizers or catch us on the usual social channels. So just to introduce the panel a little bit, small business banking, you know, it's often said that small businesses are the backbone of our economy, and yet we know that they're so underserved by the current banking system. And it's clearly a sector that's been long ripe for disruption. And the pandemic has really highlighted that in really exposing the vulnerabilities of the SME market, again, making it pretty clear that the current business banking model just isn't working. So disruption calls for disruptors, and today we have three brave, fearless and dynamic disruptors amongst us. We have the co-founder and CEO of Delta AI, Jose de la Luz Lopez, excuse the English pronunciation, focusing on opportunity. We have the co-founder and CEO of Wise, Arjun Garanjan, apologies if I've said that incorrectly, who's focusing on the US and beyond. And then we have the co-founder of the COO of Arrival, Jeremy Berger, looking at the US and predominantly global as well. So guys, welcome to the panel. It's great to have you here. So I'd like to open by getting straight to your propositions, as this is really about the future of banking live. This is about what are you doing right now and where might it go? So we'll get straight to your propositions. What are you focusing on and why? What problem, and to the point of what's on your t-shirt, Jose, make something people want, stroke need. What problem are you solving for the market? Why do we need another bank? Jose, feel free to kick off if that's okay.
Thank you very much, Cam. Sure, I think our idea behind Delta AI is to provide digital banking services for businesses. The reason comes from my previous experience as former CFO and Director of Finance, in which I had to deal a big time actually solving bureaucratic and red tapping issues with banks. And once you get past through them, the services were regularly very limited. They used to fall down pretty quickly. It was pretty difficult to scale a business when you are constrained to the abilities and skills and capabilities of a bank. So by understanding how this is a difficult thing to solve, that's where we focused. And in addition to that, we saw that there is even a bigger gap for smaller businesses, which in my opinion, they do need better services than corporations because they need to grow. So a big part of this is still constrained by the little attention big banks give to small and medium businesses because they do not represent something profitable at the moment. And we believe technology and digitization can definitely help to make this bar more standard for everyone by getting a level play field.
What would you say is the absolute core focus of what it is you're trying to do? What specific problem are you trying to solve? What might turn into your differentiator?
Our key differentiator is that we want to help businesses manage themselves better. So we're not only offering, as you mentioned, just another bank, another account, a different wallet. What we're not helping with is to have all the information on income, expenses, accounts payables, and accounts receivable in a simple, ready to easy to read dashboard. So in that regard, we not only want to offer them a way to spend money, to receive money and transfer, we think that's already somehow covered by banks. But what they lack is the ability to integrate these services already into their day-to-day operations. In what way? Sometimes we refer to this internally as managing transactions to records. So for you on a day-to-day as a business owner, you would just use our cards or mobile apps and our web apps, and all of accounting has to become magically done for you. That's exactly what we want to solve. Not only the financial access, but the pain that it comes with on managing a business.
So it's almost kind of the opposite of where digital really started out in making everything transparent and easy. This is about making it invisible. It happens behind the scenes.
I think what happens is that traditionally we have accountants on a separate corporations, banks on a different company, and then corporate cards usually by the leaders, which are not like mainstream banks. So in my opinion, there is absolutely no reason for this to keep being that way. It's just historically that we're used to it. It's just the same money moving from your company, and then you just have to make sense on what happened to it. And that has to happen just at one institution, which for us is Delta AI, in which everything happens already sorted out for you. You just care about your business and receiving the money and spending, and the system is going to give you some sort of idea on what's behind the performance of your business, so they can rest assured that you're either doing the right thing, or it can point out in where you can do best.
So you're really going beyond sort of conventional banking today and really providing insight and direction and growth. That's really interesting. I like that whole kind of beyond banking concept, and freeing up time and allowing them to focus back on the really important stuff. Arjun, at Wise, what would you say is your unique proposition, and what problem are you solving that you think is unique to what other banks might be trying to solve?
Yeah, so at Wise, we think banking needs to be an embedded experience where a business doesn't have to go and get a bank account, right? It's not bring your own bank, or BYOB as we call it, right? It should be part of the experience. So if you're a Shopify business owner, banking should be embedded. If you're a host that runs 10 apartments in New York, on Airbnb, that should be part of the experience. If you're a doctor on Teladoc, other platforms out there, it should be part of it, right? So what we are really focused on is embedding banking as an experience in these small business ecosystems, or modern business ecosystems, as we call them. Hundreds of them, possibly thousands of them all over the world. We're focused on the US market right now, but we do intend to go global with one Wise experience.
That's great. I love that. I think that's key. I mean, there's a key differentiator there in that you're actually moving away from the industry itself and moving into where customers currently are spending their time, and almost unbundling the features and functions of banking and the value chain of banking, and embedding it into where people are already spending their dollars. Interesting. And Jeremy, Arrival, what would you say is your unique proposition, your unique focus, and what specific problem for the US market and your expansions are you focusing on?
Yeah, sure. Thank you, first of all, Cam, for having me. I'm certainly delighted to be here. It's definitely no secret that small businesses are the backbone of our economy. Businesses and entrepreneurs come in many different shapes and sizes, whether you're running a small pizza joint from Chicago or a tech startup from Singapore. The pathway to becoming a corporate is not linear. At the same time, the banking needs of these SMEs are dramatically changing, but they're not being met by banks today. And again, at Arrival, we, in a nutshell, are building a fintech bank for businesses and entrepreneurs that are typically rejected by traditional banks and even digital banks, whether they're tech startups, freelancers, expats, refugees, crypto businesses. The list goes on and on and on of all these different types of SMEs that are rejected by traditional banks and digital banks, like I mentioned before. They're viewed as unusual, high risk, or abnormal, but we believe abnormal is becoming the new normal. So we're, at the end of the day, building a digital bank for abnormal customers, as we like to say. I think my team is very compelling, kind of where we come from and who we are. We launched one of the first fintech-focused venture capital funds in Singapore back in 2012. So we had the privilege of investing it into some of the earlier stage digital banks, like Simple from Portland, Oregon, which was bought by BBVA, Move-In from New York, which is Brett King's project. We also invested into Fedor Bank from Germany, SumUp, which is one of Germany's newest unicorns. So we kind of had the opportunity to go through the transformation, revolution of fintech, if you will. And then we decided, long story short, in 2018 to kind of build our own bank from scratch. And since then, we've done, I think, many cool things. But what's most exciting now is that we're rolling out our beta on June 1st. So I think that's one of the, what's next for us is we're going to roll out our beta on June 1st.
That's exciting.
And, later this year, we hopefully will be one of the first licensed US digital banks. So I'll stop there, and I'm happy to answer any more questions.
Yeah, that's great. That's really interesting. I mean, just picking up on the comment about building it all yourself, it's interesting that some fintechs are taking an approach of kind of rebundling, if you like, other fintech features and functions and propositions, and almost kind of creating a connected set of fintechs into a bank. So rather than actually creating one proposition that's proprietary, they're taking in lots of other fintechs, connecting those in, integrating those, and providing those as a connected system. I'm curious to know why you went down the build it yourself route rather than the work with other fintechs and build in other capability route.
Great question. So actually, we're building a fintech bank. So back in 2017, our CEO published a book called The First Fintech Bank's Arrival, basically describing our vision of building a fintech bank. So if fintech was once about unbundling the bank, breaking it apart 5, 6, 7, 8 years ago, now the trend, and I think a lot of what we hear today, is rebundling it back together, moving away from a monoline approach to a multi-line approach. So in many ways, we don't want to reinvent the wheel. We don't want to develop products and services in-house if we don't need to. And we don't want to compete with other fintechs. On the contrary, we want to bundle and integrate some of the more hotter fintechs on the market into one banking platform. And we wrote kind of this concept, like I mentioned a few years ago. We had the chance to present it at some of the top business schools in the world, like NCEAD in Singapore, Wharton Business School in Pennsylvania. And that kind of inspired us, like I said, to build the bank from scratch, but really have this fintech partnership-centric business model. So at the end of the day, we want to ensure qualitative access to some of the best third-party fintechs on the market for these small business owners. Okay, so it's ultimately your as you're describing a bank. I mean, you have a charter. You have a charter, or you're getting there. Yeah. So are you a bank? Yeah, great question. So we actually have two business models. From the get-go, we understood that none of the neobanks in the U.S. are licensed. So if you look at players like Novo from New York, they're partnered with Middlesex Federal Savings Union. Wise, I guess, is with BBVA. Correct me if I'm wrong, of course. We have Mercury, who's with Evolve, Aslo, BBVA. I mean, all the neobanks in the U.S. need a sponsor bank. So we thought our kind of differentiator had to be our own license. And for that reason, we've applied already for 3 different licenses, one in the U.S., where we just received our preliminary approval. And like I said, we'll be fully licensed at the end of this year. We've also applied in Singapore and most recently in the EU. With that being said, we've learned a lot. And just to maybe wrap up the point here is that the licensing process can be very time consuming and strenuous. And at the same time, when you're a startup, you need to develop your product, raise money, grow the team, you accumulate this waiting list, and we need to go live as fast as possible. So that's led us to our second business model, which I just kind of mentioned, is the bank partnerships. So I think that's what's unique about us, is we're going in parallel for our own license. And at the same time, we have 2 bank partners already in the US that will tremendously accelerate our time to market. Well, I might just open that point up to the panel, because I think it's really interesting that for a number of fintechs, there's this sort of dichotomy of whether you want to be a bank or a non-bank. And some fintechs do, they're kind of taking on the charter and the license, and they're saying, we're going to be a bank and this is what we're going to provide. Others say, well, that might actually constrain us and put us down a traditional banking model route that doesn't enable us to deliver our proposition. You mentioned it's a differentiating factor. And I'd like to bring the focus back to how might your business model deliver value to your customers. And I may put that to you, Arjun, if that's okay. If you can share a little bit about what your business model is, whether you're going down the licensing route, the charter route, or the non-bank route. What is your identity, and how does that identity of you, of your organization being a bank or a non-bank, play into the proposition that you're delivering to your market, and how will it deliver that value?
Well, I mean, these are debates, we have pretty much every week in terms of whether we go out and look for our own charter or, partner with a bank and launch our offering. So as of right now, our focus is on building out the experience, because I think it's really, really hard, especially in the US, to do both, which is get your own charter and to build out a killer experience for the end user, right? So obviously that's something we do plan, but in the initial stages of the company, it's a pretty young startup. We just turned 1, we raised our seed round. So we focused as of right now on building out experiences and really focusing on partnerships and channels and embedding the experience versus having to really worry about the licensing or the bank charter piece. And in our journey, we were very, very fortunate to partner very early with BBVA. We launched in 6 months and then very quickly onboarded 1,000+ businesses with thousands others in the pipeline. So yeah, that's a discussion obviously we've had, but as of right now, we are, as I mentioned, focused on partnerships and not on getting a charter.
And focusing on those partnerships to drive the experience of your proposition.
Yeah. So for example, if you go to, let's say in the card world, right? If you go to united.com, you see United launch a card to their customers in partnership with Chase. You go to Costco, Costco launches another issuing partner. So I think what's happening is that we will see that shift in banking also, where it's partnerships, it's fintechs like us that are partnering with ecosystems out there, as I mentioned, to offer the product to their customers, right? So I think that's our focus area, and I think there's plenty of opportunity, plenty of problems to solve there, because once you get the ecosystem and the businesses on the ecosystem all on the same sort of banking platform, then it just makes life a lot easier for everyone involved, right? I think Square is a great example. They've been pursuing that obviously with the Square card and with their own charter. Shopify made an announcement a couple of days back. So that's a trend you see happening. And we think that's the future of banking, where it's really focused on experiences inside ecosystems.
Yeah, that's great. And on that note, I'd like to sort of try and move away from the banking model, if that's okay, and talk a little bit more about your propositions and try and understand what your driving principles are for your proposition. I think, Arjun, when we spoke before, you talked about being the Stripe of the banking world, and you talked about embedded banking, embedded experiences. Are you able to tell us a little bit more about that? And equally, guys, I'd love to hear from both Delta and Arrival a little bit more about what's driving, whether it's technology or concept or a strategy, what's driving your proposition design?
Yeah, so we think there are two ways to monetize. One is obviously on the transactions, which is on the acceptance piece, on the payables, obviously bigger margins there being the issuing bank, and of course on the deposits. But we think in the long term, it's got to be a SaaS subscription offering. So for example, if a Shopify business owner pays $30 to Shopify for their e-commerce platform, there's no reason for them not to pay $40 for a Shopify Plus banking experience, right? So yeah, we think subscription is the way to go, as long as you're able to add a very, very clear value to the ecosystem that the business already pays on a monthly basis.
Interesting. Jose, what's driving your proposition? I think it might be in your bank name at the end of it, but tell us a little bit more about how you're planning to get AI and the value you're creating from that.
Sure. For us, we also want to move away from the already rejected system of hidden fees all around. I guess one of the main complaints we hear from the customers of banks that are trying to move away from them and starting to test Delta AI proposition is that they really hate to receive just hidden fees all around. And we're just doing something completely opposite, which is showing, first of all, what is going to be our charge for the services. And we believe that financial services in general for businesses are going to come down to zero. We can see that for consumer. If you think about yourself, you don't want to be paying around for all of the card propositions and the wallets you are receiving. You just want to use your money, and we can see some of the proponents fighting for different value propositions for the consumer and making them easy, almost free for them to use. I believe for businesses, there is a little bit of less resistance to pay, but you don't want to pay for the financial service itself. The transfers, the cards, the replacement is something that doesn't really add value to them at first. So by trying to move away from this model, we also pursue a software as a service or subscription model in which by paying a fixed amount monthly, you get an array of services which currently banks do not offer. And that is why we concentrate our value proposition more into helping you manage your financial assets, your flows, your income and reception of money, rather than just charging you for keep the money. I guess the old concept of banks, like fortify treasury, halls of money, which they could hold your bars, no longer sustains. We're in a world of digital money, and then financial services have to be digitized as well. And I guess the same comes from the side of administration, in which you no longer need to sit with your accountant and go through spreadsheets and start writing down what's going on. Everything has to be united by a value proposition. And it is very important to remember that all of this is happening on the backdrop of a very strong digitalization of services all around the world. So if this is covered, the reception of your money, the management of your income and expenses, the accounts payable and receivable, then the most important thing to offer, and is that something I guess my peers are also focusing big time, is to offer all of these services in a digitized manner. API connections, a lot of tailoring. People want to be able to modularize the service they want and just pay for them. I don't think people is resistant to pay. I think people is resistant to pay for something that doesn't add value. So if we can hook all of the services to a fair rate, I think people is going to be happy to pay for that as long as they receive this value. And this value is going to come from two sides, easiness and integration of use, and the ability to create their own ecosystem as they please.
I mean, that's fascinating, because that really moves away from today's model of just providing a store for your money into a space where you're actually becoming the partner. Again, you know, back to the definition of, are you a bank or something else? You know, you're now actually taking on more of a sort of almost not quite a financial advisor, but a financial assistant type of role in providing help with growth, not just managing your day-to-day business. Jeremy, I'd love to hear a little bit more about, from all of you perhaps, what other challenges do you see in the SME, in the small business market space in the US and in the LatAm region, that you think very few fintechs and big banks certainly aren't answering today?
So first of all, I think we need to understand why traditional banks are not typically serving these types of customers, right? So first of all, they generate most of the revenue from retail customers, international transaction fees, mortgages, institutional clients, so on and so forth. So their bread and butter is not really this kind of, you know, niche of SMEs, if you will. Especially when we talk about crypto businesses, charity organizations, in the US, for example, cannabis businesses. These are just examples of segments that are really underbanked. Another kind of, you know, factor to why traditional banks are not serving these types of businesses is because their licenses that they have are fit for certain customers and certain product lines. So when you add a new customer line, you're kind of at risk of losing your license in many ways. Furthermore, when you have hundreds of thousands of employees, like a bigger bank, let's say, it's really difficult to re-engineer processes internally to all of a sudden onboard these types of businesses. And that leads me to my last point, which is compliance. So I think one of the biggest topics nowadays in fintech is going to be RegTech inside fintechs. So bottom line, compliance is old-fashioned, it's costly, it's time-consuming. It's not designed for these types of businesses that we talked about before from our abnormal spectrum. And you can't onboard international entities. So these are some of the challenges that we've seen is there's all these kind of innovative startups, whether they're in Spain or Singapore, Hong Kong, Germany, that just want a USD banking account. But we've tried it ourselves and it's almost impossible to open up these types of bank accounts. I think maybe just to wrap up, you know, I'm hearing a lot about subscription fees, and I don't think we would agree with those points. We're in many ways building a transactional bank. I think that gives a lot of flexibility to the customers, pay as you go. You don't have to commit to a lot of kind of, you know, cash flow down the road for a banking account. And at the same time, we like to ask our customers, what if all your favorite fintechs arrived as one bank? I think right now, one of the biggest challenges for small business owners is that they have to go from bank to bank, fintech to fintech, vendor to vendor, looking for all these kinds of products and services that help their business thrive on a day-to-day level. But what this means is it's a very chaotic experience. It's almost a goose chase of downloading all these different apps, passing KYC, opening all these new accounts over and over again. So what we're saying is we want to bundle some of your favorite fintechs tailored for your business. Now the data is aggregated. The movement of money is very transparent because it's connected to one arrival bank account. And at the end of the day, you have this qualitative access to fintechs that makes sense. So I think these are some of the challenges that we're trying to solve on a high level.
Yeah, I think you're absolutely on the money with compliance, and I think the relationship with compliance and internationalization as well is something I've got a feeling might be impacting all of you. Arjun, do you? I imagine that that'll be on your mind as well. It'd be interesting to hear what challenges you're having in your growth trajectory, and how you might go about tackling those.
Yeah, so obviously it's an ongoing challenge. It's a relationship. We've got to stay compliant, for example, in the US with our partner bank, that's BBVA. In turn, they've got to be compliant with federal regulations. So yeah, it's something we focus on a lot, and we also keep the user experience in the mind while we're building that out, right? I think Jeremy made a really good point about how hard it's to get a bank account, especially business bank account, right? So if you look at why the KYB piece, right, in the US is extremely fragmented, right? You've got 50 different states, unlike UK, where it's one regulatory body that does it. So it's a hard problem to solve, but I think it'll happen over time. There are companies like Middesk that are really doing a good job bringing things together. And as long as we can consolidate these sources and make sure that we are able to provide a seamless experience, so no matter where you're in the US or in the world, you should be able to, if you're a legitimate business, right? And you have a file, we should be able to onboard you to the product, right? So that's the ultimate goal, but obviously that's not going to happen overnight, right? It's a process, and we are delighted that we've made significant progress just in the last 6 months. So my thought here is that it's got to be a conscious effort from the fintech, from your partners, and only then things get better. But if you let it sit, then it's the same old experience that you're offering that traditional banks do, right? Which is not easy.
So it's a real balance of that friction between designing the experience, designing your proposition, but also meeting your compliance requirements as well.
Exactly. And I think the challenger banks in the UK have done a really, really good job. If you look at Tide, Starling, Revolut, and some of the others, they've really differentiated their offering by allowing the user to originate a bank account, whether it's consumer or business, very, very quickly, right? So I think what we have learned in sort of onboarding these customers is time is of essence to small businesses, right? They're very, very focused on actually running the business. And second was very interesting. They're not price conscious like they used to be 10 or 15 years back, right? They're value conscious now. So if you tell them, hey, I'll give you a decent product for $0 a month, or I'll give you an amazing experience for $10 a month, all you can eat, they would most likely, if they're a serious business with high frequency ARAP, they'd most likely take the $10 option. So we are A/B testing that. Obviously very interesting to see how that works out. But if you look at banks in the US, traditionally, they've been charging anywhere from $10 to $25 for a business bank account. It's not new. It's just what kind of value you can create for it, right?
Yeah, that's interesting. And what, I mean, we heard from Jeremy that, I mean, I love your target market, the kind of almost the undesirables of the business world, the misunderstood of the business world, the abnormal becoming the new normal. For both yourselves, Jose and Arjun, who is your target market that you're wrapping your business around? What's unusual about them? What's unique about their challenges? Be they refugees, be they micro businesses, be they slightly bigger? Jose?
We have two. When we talk about small and medium businesses, it's like a zoo of a huge range of different sizes and colors and kinds of customers. I think that is one of the reasons why traditional banking has traditionally failed to this market, is because they want to measure it with the same stick, while each of us are completely different. So it is very difficult to meet the standards of something that is just impossible to fit. In our case, we tend to separate into different kinds. IDE, innovative driven enterprises, which are like startups with very few capital at the beginning, but a lot of potential to grow. If you look at the traditional measurement of businesses, they will never fit this stick because they start with zero, they start with debt, they start with equity, they need to raise money. And that's one of the segments we are looking to serve better. The core of the systems we offer is the same for two markets. However, for the first segment, which is IDE, innovative driven startups, enterprises, also known as startups, they do need a lot more of control, digitalization, ease of access. It's kind of weird, but in Mexico, I don't know for the rest of the world, but banks open only 9 to 4. And after that, you got to go. And you know, these kind of businesses happen from 9 to 12 to 1 a.m. We still need to pay for services. We still need to send invoices. We still need to do a lot of things. We cannot rest after 4 p.m. So we start to tailor all of the needs so that we can work and be available during the weekends, during the bank holidays. There are no holidays for us. We are always open. We believe it's kind of counterintuitive to have a web that works 24/7 and then you shut the bulb at any given specific point. And the second target we're going after is the traditional SMEs. They don't need a lot of digitalization in some way. They don't need APIs. We're talking about doctors, nurses, bakeries. This is a true backbone of the economy, and they need more comprehensive services that can help them wrap their heads around what the business is doing, which suppliers are increasing the price, which suppliers could offer a different alternative, how the concentration of their customers is happening. So we want to give them tools to understand better their businesses and have better financial statements that they can take to traditional bank, to other fintechs, so they can get better financing when they need it. So in that regard, we're like a guardian that helps them understand their own business and present them in a better manner so they can have access to financial services that otherwise could be out of their reach. So in these two segments, although they have different needs, the core of the LTI works the same. It's just the value proposition that is slightly changed according to their own needs.
Yeah, our target market is small businesses that are digital. And when I say digital, it could be natively digital, like they've started a storefront or they run their business 100% online. They've never seen a physical location. Or progressively digital, where they are moving from physical locations to running their business online. I think telemedicine, telehealth is a great industry where we're seeing that entire ecosystem accelerated due to today's environment, right? So these are what we are interested in. They are 24/7, 365 businesses. They are not your Monday to Friday 9 to 5 neighborhood bakery, right? Or dry cleaner. So it's a very, very interesting market to go after because that segment is growing, right? Not just in the US, 30 million small businesses out here, but worldwide, you're seeing more and more businesses going online and digitizing their entire experience. And companies like QuickBooks and Xero on the accounting side have done a great job with payroll companies, all building out this little ecosystem. Think of it almost like a jigsaw puzzle of digital services, right? That's got banking missing, so we're trying to fill that piece.
I like the concept of the jigsaw puzzle of all the pieces, which kind of takes me to my final question. I just want to make sure we've got enough time to discuss this because I think this is where it gets kind of exciting. And as I'm thinking about it, I've been distracted by Jeremy's T-shirt because my question is what's next? What's the future? And I think your T-shirt is saying banks are old. Why not? Okay, but it doesn't say banks are dead. So in terms of what's next, we've talked about challenges and opportunities. We've talked about where you are now, where you want to focus. A lot of it is aspirational, some of it's real. And you are designing yourselves a promise to the market to solve some of these big problems that SMEs have, which is great. But where do you think, and obviously there's a this seismic crisis right now with the COVID pandemic is really changing the landscape of what we're dealing with. But it's actually more, as I said at the beginning, highlighted the exposure and highlighted the vulnerabilities of what SMEs are dealing with. Where do you see the next 5 to 7 years taking us in terms of what the SME market might look like, but also what the industry might look like? What do you see the biggest opportunities or the biggest challenges or the biggest trends coming through? Banks will obviously be older, Jeremy.
Yeah, maybe I'll start.
Yeah.
So I think first and foremost, we're going to see kind of the maybe fallbacks with bank partnerships in fintechs. So now the hot topic is banks and fintechs partnering. I think that's like been the front line of any conference that I've been to the last couple of years, excuse me.
Yeah.
And at the same time, I think, we're going to see maybe the fault. So fintechs are going to see they're restricted to certain products because the legacy like infrastructure can be archaic, and maybe commercial terms are not going to be so flexible and easy to negotiate. So I don't know if there are going to be so many obvious advantages moving forward. And for that reason, there's going to be more fintechs going for licenses in the next few years. Furthermore, it's obviously going to become much more crowded and I think saturated. So right now there's over 100 digital banks that are exclusively focusing on retail customers, whereas there's just a fraction of those are actually exclusively focusing on SMEs.
So do you think you're right at the start of the curve in your region?
I think we all are. Yeah, I think everybody on the panel is. So in the US, it's much more nascent, let's say, than Europe. I think most of us will agree with that. So it'll be interesting to see how things shake out in the US because it's just a huge market, right? There's over 28 million small businesses. There's over 600,000 businesses that are coming to life every year, right? 40% of the US workforce is freelancing in one way or another. So there's over 50 million freelancers in the US. And there's not like a big supply yet in terms of banks that are actually gaining huge market share, other than kind of the neobanks or digital banks like Chime that are focusing more on retail customers, et cetera, et cetera. I think that
I can imagine that will only continue to grow with COVID and people losing their jobs and working out what to do and working out what talents they can monetize.
Exactly. So I think if I were to synthesize, the first is kind of understanding maybe the faults or gaps in bank partners and fintechs. Second is understanding kind of the wave of licenses that might kind of originate from that fallback or fault, let's say. And then the last one, I kind of alluded to this before, is compliance in RegTech. So I think it'll be much more compelling when fintechs can say, or neobanks can say, hey, we built our own core, not just our front end and middleware and APIs and open banking platform, but really we built our own backend core system. We built our own kind of compliance platform and compliance engine. And when fintechs can really say this, let's say in front of an investor like Sequoia, then these fintechs are going to be much more attractive and appealing for the next few years to come.
I'm going to be slightly devil's advocate here, but why would fintechs build their own core? I follow Chris Skinner a lot. I admire a lot of his work, and he often tells fintechs to stop building their own cores.
I don't know about that. I was just in San Fran a few months ago meeting with one of the fintech partners of Andreessen Horowitz, and this is what's hot on their agenda, that they're looking for fintechs that have their own core built in. So I think it can go both ways. We've done maybe shopping with 25 or 30 different core providers, so we have kind of insights, and we're aware of the better ones and maybe the less innovative ones. But at the end of the day, it's something we want to ultimately try to build in-house if possible.
I'd like to interrupt in there because I think it's a key topic. I think that the coin is still flipping in the air between should we create our own core or not. I tend to agree a little bit more with Jeremy in there that ownership of the technology is gonna ultimately let us control the user experience. Otherwise, there would be some limitations. And I understand the side of the, kind of the Silicon Valley approach and the VC approach in which they want you to be linear as possible, and they wouldn't like you to build your core because it's such a huge bet that can definitely jeopardize the business at some point. And we, each of the fintechs working in this, have to bet every day. Should we keep like investing in something as big, complicated, and time consuming as our own core? But I guess on the side of the VCs, they, their approach is that they have a lot of options. So they don't really want each of them building this huge groundwork for something that they want to see. They want to accelerate and see the results. But I guess everyone putting some effort into this is going to see at some point the advantages. But it's still, it's a high stakes bet. So it's really interesting to think about
we'll have
that.
to see where that we'll have to see where that coin lands. Sorry, Arjun, go ahead. Did you?
Oh, I was just saying the view we have taken, right? The next 5-10 years, honestly, these millennials and the Gen Z that are turning into these business owners don't really care about banking. They don't wake up thinking about banking or payments, how and all that, right? They want products like us here to figure it out for them, right? So we think it's all about the experience. And I think one company that did an amazing job, right, is obviously Uber in the last 10 years, where you don't say, hey, I'm going to catch a cab via Uber, right? They built their own experience. Hey, I'm going to Uber to the airport. Doesn't matter where it's in the world, it's one Uber experience, right? So you stop relating Uber to cabs, it's its own experience, which is, what we believe in, right? Things about, what's under the hood, the plumbing, how Uber got its San Francisco permit versus actually running in Vegas. Users don't care about that as long as it's solving a very, very clear problem, right? So our focus is 100% building out the experience and abstract all of that from the end user, which in our case is a modern business.
And then from that point, I guess you then identify probably the most pragmatic and practical way forward, whether it's build it or buy it or partner with someone else. Is that your strategy?
Yeah, and it could be, a hybrid approach to start with, and it could be different in different countries. Obviously, the regulations are different. So yeah, I think you've got to take that one day at a time. But what I was trying to say is that it doesn't matter what route you take, as long as the end user experience is great and you're solving a real world problem.
Yeah, I'm just going to jump back to Jeremy's point about compliance, and it brings up a point, in terms of where the future is going around internationalization. Now, I know, I think all of you have plans to internationalize your propositions and your organizations. What kind of challenges is that raising for you?
Yeah, I think the first. Oh, sorry, go ahead.
Go ahead.
No, I was just saying I think the biggest challenge in the business world is KYB. Even in North America, if you look at US and Canada, right, the way you process information, the data available for the business is very, very different. And that's, I think, going to be a challenge for anyone who's looking to go global. But having said that, it's not the first time it's happening. Going back to Uber example, obviously, having a license in the US, the 50 states is very different from, having one in Canada. So they've done it and kept the experience the same. So it's definitely possible. But I think the banking world is a little behind. I think companies like Stripe have done a really, really good job, one API that works in 50 plus countries, right? So I think it's definitely possible. And I think it's going to happen in the next 5 years. But it's about, unifying all the systems out there and really having one source of truth, right? And I think that's definitely in the US. It's going to be a while for that to happen.
So to the question of how do you see the next 5 years playing out, or particularly in your industry, do you see it as kind of like one big player like Stripe, or do you see it as a very, very fragmented market of artisans?
I think there would be a lot of consolidation. And I think companies like Robinhood already are starting to do that, right? You could purchase, stock inside the Robinhood app, and now you have a bank account, good funds available to buy stock anytime, right? So I think the rebundling, consolidation, partnerships is the way to go the next 5-10 years. That's what we think.
And I think you just brought a great point about consolidation. In fact, what we've learned over the last couple of months as we're trying to actively grow our team and expand, that it might make more sense for us to invest or potentially acquire an early stage fintech. And I think this will kind of inspire, the new wave of fintechs joining forces to really take on the digital banking world by storm. kind of coming back to compliance momentarily, from the beginning, we understood that had to be our X factor, and that's where we put most of our time and resources into developing our kind of own comprehensive compliance platform that we've named AID, Arrival Identification. When we started the project, we looked at many different providers and vendors. However, one is focused on KYC in the US, another is focused on KYB in the EU, and another is doing adverse media checking, let's say in the APAC. So there's this kind of huge gaps and disparities that exist. At the same time, the sales cycle is incredibly long and strenuous. So I'm talking about a couple months of doing demos, of looking at API docs, of looking at commercial terms. And this is not kind of optimal or friendly for an early stage fintech that needs to remain fast, agile, and nimble. So with that in mind, I think, there's a couple key ingredients for, let's say, the future fintech bank. First is obviously an API-based banking platform. And I think the second that kind of goes hand in hand is your own compliance platform that is full stack, covering everything from KYC to KYB to AML, transaction monitoring, and everything in between. But for each piece of the puzzle, you don't have to develop your own model or own system. You can just simply aggregate some of the hotter, let's say, reg text on the market, whether it's a Comply Advantage or a Unit 21 from the Bay Area, or Allied.co from New York. There's many compelling and sexy reg texts that exist. Now, what you need to ask yourself once you have this kind of recipe is you can effectively become a BaaS player, so banking as a service player. And this is, I think, what's really going to become more and more apparent the next 2 or 3 years, what fintechs can actually help launch and grow other fintechs on their infrastructure. You have your own license, you have your own banking platform, you have your own core, you have your own compliance. You can really accelerate the growth of other fintechs. And I think that's where we're close to kind of transitioning into our next chapter, into becoming a kind of a full stack BaaS offering.
Almost like a platform player. That's interesting. Jose, where's your business's 5-year trajectory looking like, and where do you see the opportunities, and how do you see that playing out?
We have a view in which we believe the digitization of business is going to be the main trend. We have seen this already, and I think COVID-19 just stressed how the biggest portion at some point of flow of business is going to come from digital channels. So we will see not only current customers and current businesses trying to digitize themselves, some others growing automatically into some sort of more e-commerce trends. But to us, to be honest, we believe that we're building at the same time the bank of the present and on the future. We think the next generations, we're not certain yet, but they will, as Arjun mentioned, they won't think about banking. They will never think about going to a branch. I guess many of them will hate the feeling of having to ring or to talk to any sort of voice interaction. So we need to provide them with tools with different touch points. And that's exactly what we do now. We have AI bot just all the way, all the time, accompanying them into their transactions so they can ask whatever they need. We have touch points on WhatsApp. We have the traditional email. We also have still a space for telephone interactions via either IVR or traditional human. Mm-hmm. But we believe the future is going to be more in the side of people avoiding to lose their time in queues, in waiting for some sort of paper to be signed, some sort of manually input PIN. They want everything digitized. So we believe the future, not only 5 years, but 25 years, 50 years from now, is zeros and ones. Everything has to be digital. It has to be, they have to retain the ability to choose how they want to talk to you, via API, via UI, via phone, etc.
Yeah, and a big part of your strategy is AI, obviously. There's a lot of AI being used today, a lot of machine learning being used today to drive optimization of businesses, of operations, make products smarter. Sort of jumping forward 5 years, AI is going to look very different to what it looks like today. Where do you see AI taking the experience of banking?
Totally. So as far as we can see today, we believe that in the future, banking systems, particularly like Delta Yeah, which wants to integrate a CFO, is going to be in the same way today you can drive a Tesla. When you drive a Tesla, you can either choose if you want it to be your autopilot or your copilot. So it can help you and guide you on the street and tell you where to go and what to do. But you feel a little bit tired to hold for long the steering wheel, you can just press autopilot and you can still just
so
see what's going on.
The self-driving bank.
And I believe the same is going to be for banking. You can just make the machine do it, but if you don't like something, you can just steer back and control. And that's pretty much what we're building in terms of how we think our vision for businesses and their interaction with the banking will be, either autopilot or just copilot.
Yeah, so I like that concept. It's almost like the self-driving bank. It's like take control when you need to, but the rest of the time it's happening behind the scenes. You don't need to worry about the administration, which comes back to all of your points from the beginning of the panel, which is, the biggest problem you're trying to solve is time and relevance by the sounds of it as well, Jeremy, particularly in your space for your much more underserved segments of consultants and refugees and immigrants and so on. I'd probably, we're pretty much out of time, so I'd love to wrap up. If there's any kind of, I don't normally do this on a panel, but I think it's quite fun with this group because you've all got quite strong opinions. Is there a closing view that you would like to share with the audience, given that the audience is fintechs who might already be in your space, trying to get into your space, but also large established banks who are trying to serve the SME market? What learning might you leave with them?
I think just to continue on the topic of AI, obviously a buzzword, and people really love to add the AI piece in a product, but just thinking of the customer point of view, right? Banks have been completely DIY, right? You imagine walking into a Chase or Wells Fargo, they ask you, what do you want? You have to go do it yourself, sign a check or whatever, right? I think the transition is DIY to, do it for me, right? And that's where AI comes in, right? So as long as we can do that and start to, do the work, the heavy lifting for a business or a consumer using AI, I think that will solve real world problems, which will give them a lot more time to go about running the business and less time figuring banking and payments.
Yeah, I love that. I love that concept. Jeremy, would you like to conclude?
Yeah, I think if there's one maybe point of emphasis, it's workplace culture. I think we didn't touch base on that before. So for us, we want to create the most authentic and natural experience for our customers, where they can reach out to us and ask us not only what's going on with their bank account, but where is our favorite speakeasy bar in New York, or can we help them find other alternatives that fit their business? I think kind of establishing that kind of personal connection encourages retention, loyalty, and really helps you scale the business. One of the benchmarks on the market is Zappos. So Zappos totally reinvented workplace culture in the early 2000s, and this allowed them to be acquired by Amazon for over $1 billion. And Zappos has the world record for the longest customer service phone call for over 12 hours. And the way they treat their customers is incredible. I mean, they like to call themselves a customer service company that happens to sell shoes. And hopefully we can, one day call ourselves the same. We want to really emphasize how we treat our customers. We want to create real relationships with them. And I think that'll be the biggest maybe trigger for other fintechs to follow down the road.
Yeah, no, I love that. I love that. Almost kind of like a culture company. That's great. And Jose, how would you conclude your thoughts? What would you like to leave the audience with to ponder on as they go through the rest of the event?
Well, first of all, thank you all for enduring all of these prepared conversations for you. So I hope you really enjoyed them. Unfortunately, you cannot ask questions live, but I'm sure the organizers will find a way to put us somewhere in which we can be confronted by powerful questions. So I'm looking forward to that. In our case, I think the last remark, it's a little bit on how the philosophy for Delta AI, which is to provide peace of mind for business owners. So what we think about this is that no business owners wakes up thinking they have to do their payroll, they have to do their purchase ledger. It's something that they have to do, but it's not really adding value to their day-to-day. And that's where Delta AI wants to come and take away all of the chores that you hate. It's something that either we love or we want to make automatic at some point. So for us, making something people want is give them peace when running their businesses. And that's exactly where we like to help. So everything that you recognize as something you would like to stop doing, but you need to for your business, just keep in touch with us and let us know what it is, and we'll work happily to make that stop and release time to do what you do best, which is create and grow your business.
I love that. I think, I think what I'm taking away is all three of you are so obsessed and dedicated to creating great experiences for your particular market. Jose, Jeremy, Arjun, thank you so much for being on our panel. You've been great panelists. You've shared some great insights. Thank you very much. And I do wish you the very best of luck and success with your ventures. Thank you very much to the viewers. And thank you very much to the organizers, Marcel and team, and Renee, of course. If you do have any questions as viewers, again, just reach out to the organizers, or you have our names, reach out to us on the usual social channels, and I'm sure we'd be happy to respond. With that, I'll say goodbye. Thank you very much, guys. Enjoy the rest of your days, and viewers, enjoy the rest of the event. Thank you.
Thank you.
You.